Hey everybody, Mike here with Practical Income Investing. Hey, so I wanted to tell you that I caught some of that AI trade, the memory trade in particular, but I didn't time Micron perfectly. I didn't time SanDisk perfectly. I got into an ETF called DRAM, DRAM. I talked a little bit about it on my last video, but what what I did was I caught this DRAM at a pretty nice level, around 49, I believe, and it's run up. I believe it's around $77 right now, and I had shares. I was in several leaps, so positions up very nicely. But that's not. I'm not here to say that. What I want to talk about is this position early? Is this am I just excited because the position's up? Um, that is what this video is going to be about. I want to dig in and find out, are we still early on this memory trade, or is this something that we better think about getting out maybe, or sitting the sideline? That's what this video is about. This is a good one. Enjoy it.
Just a quick reminder before we begin, this video is for educational and informational purposes only. This is not financial advice. Anytime you're dealing with investing or options, make sure you do your own research and make your own decisions. The title of this video is the AI memory trade opportunity or trap, because I think this is the honest question. AI needs memory. We all know that. That part's real. HBM, DRAM, NAND, enterprise storage. All of these are becoming more important because the AI systems are consuming massive amounts of data. But after a huge run, you can't just say, well, it went up, so must keep going. That's where people get themselves into trouble. You have to separate the thesis from the chase. The thesis may be still strong, but the entry, the valuation, the cycle, and that risk still matters. So in this video, I want to walk through why memory is becoming such an important AI theme, why DRAM, caught my attention, and what I'm watching next. This one's personal for me because I do own DRAM. I'm glad I got in, but I also want to be honest. I missed some of the individual memory names. I mean, obviously, I wish I bought Micron a couple months ago. I wish I caught some of the other memory stocks before they made those big moves. But the reason I liked DRAM was pretty simple. I didn't have to pick the perfect memory winner. I can get a basket of exposure to the broader memory theme. So that does not remove the risk, but it does give me exposure of the area of the market that I think is going to be the most important part of the AI build out. The question now is not whether the move worked, because it did. My positions are up really like a lot. A couple of my leaps are up almost 200% already, and they just keep going. So the question isn't whether it worked. It worked. The question is, does the thesis still have room really? And more importantly, is it still reasonable to think that this has more time to move? Or are people just chasing this because the chart's already gone up? The first thing to understand is that AI does not need just GPUs. GPUs get the headlines, NVIDIA gets the attention, and for good reason. I mean, they're a massive company, but the memory helps determine how much data these AI systems can process, store, and move. That means bandwidth matters, capacity, speed matters. If the GPU is the engine, The memory is the part that allows the engine to be useful at scale. Before I go any further, let me define a couple terms because this can get confusing. I remember when I first started looking at this stuff, I was like, wait, what the hell is DRAM and HBM and all this? So when I say DRAM, there's two things you're going to hear from me. I'm saying DRAM. DRAM is a memory technology. I'm talking about, it's called dynamic random access memory. Random access RAM, now it's dynamic random access memory. This is one of the core types of memory computers use to store access data while they're working. When I say HBM, that stands for high bandwidth memory. Now, HBM is more advanced. It's high performance type of memory that it's especially important for AI because these systems need to move massive amounts of data extremely fast. And then when I say DRAM as the ticker, I'm talking about the Roundhill Memory ETF. So there are three separate ideas here. DRAM, the memory technology. HBM is the high bandwidth memory that's used heavily in AI. And then DRAM, the ETF that gives exposure to the broader memory theme. That distinction matters because this video, it's not just about one ticker. It's about the memory becoming one of the key bottlenecks behind AI. This is where HBM becomes important. Again, HBM stands for high bandwidth memory. So in AI, the high bandwidth memory is becoming a strategic piece of the system. Micron said memory has become a strategic asset in the AI era. One of the biggest things that caught my attention is Micron already completed price and volume agreements for its entire calendar 2026 HBM memory supply. That tells me that customers are not just casually buying memory. They are trying to lock in supply. Micron also talked about the HBM market growing significantly, with forecasts pointing towards a much larger market by 2028. Now, forecasts, they're not guarantees, but what I want to be clear about is they don't show why investors are paying attention. The demand is strong, supply is tight, the customers are locking in capacity. That's the setup worth researching. It doesn't mean you're blindly buying anything with memory exposure, but that this theme deserves your serious attention. The next part of this thesis is the supply problem. The basic idea is this: they cannot make everything fast enough. The demand is pulling memory capacity towards the HBM, server DRAM, and enterprise SSDs. So that can tighten supply of conventional memory too, because manufacturing capacity isn't unlimited. TrendForce projected major increases in conventional DRAM and NAND contract prices for the quarter shown here. And part of that comes from the suppliers reallocating capacity towards higher demand servers and AI related products. So the exact numbers matter less than the bigger point. The AI demand is pulling the memory supply chain. When the supply is tight, that can support pricing. Okay? But there's a second half to this sentence. The tight supply can support pricing until supply catches up. That's why I want to be disciplined here. The bull case is real, but the supply response is what investors have to keep watching, because memory can look amazing when pricing is strong. But if too much supply comes online later, that can change the setup really fast. Something to be watching for. This is what I want everybody to be mindful of. This is going to stop at some point. When? Could be a question. This is why the DRAM ETF works for this theme. And just to be clear, I'm talking about DRAM the ticker, the Roundhill Memory ETF. The reason I like this approach is that I didn't have to pick one perfect memory stock. I wasn't sure which one was going to run at the time. The ETF gives exposure to the broader memory ecosystem, including companies tied to HBM, DRAM, or DRAM NAND, and SSDs, storage, and kind of related memory technologies. So instead of saying I have to be exactly right on Micron or exactly right on any one individual company, the ETF gives a basket approach to the memory theme. That's what appealed to me. I missed some of the individual names, and I want to kick myself for it, but I still found a way to get exposure to this theme. But that doesn't remove the risk. It just changes the risk. It's a broad market ETF. It's not the S&P 500. It's a concentrated thematic bet on memory. So if the memory works, this can move hard. But if the theme turns, and this can also turn the other way. So even though it's an ETF, I'm absolutely watching it close. All right, so here's the bull case. AI workloads are becoming more memory intensive. Okay, so HBM demand is growing rapidly, the supply remains tight. Memory companies may have more pricing power than they had in weaker cycles. Forecasts point to big time growth in 2027 and 2028, and honestly, possibly beyond, possibly 2030. And who knows how big this can get. This is why I don't think the memory trade is just to be dismissed because it's already moved. That's the hard part. Like, how far can it go up? Geez. But sometimes a theme starts working because the market finally makes or wakes up to something real. And if the AI demand keeps expanding, memory is going to remain one of the key bottlenecks. This is the reason the trade is getting attention. The reason I'm still watching it, and personally, this is where I think the argument gets interesting because memory has always been cyclical, but AI may be changing the shape of that cycle. I'm not saying that the cycle's dead necessarily, but what I think is happening is that the demand profile may be very different than the old PC and smartphone driven cycles. That's the bull case. I mean, everybody knows every so often Apple's going to come out with a new phone. What drives that? Those are memory chips in there. You got Google's going to put out new phones. Those are the cycles we're talking about. And in this case, with the memory demand so strong, that's why I think the cycle has moved a little bit. I don't think it's as cyclical as it once was, at least for now. But now we have to talk about the risk because this is where people can get hurt. Memory has historically been cyclical. Prices can roll over. Supply can catch up. The ETF can get crowded. One big thing or one big move, one bad entry timing becomes real risk. Now, I personally believe AI may be changing the old memory cycle. I think that this demand is different than just normal PC and smartphone cycles. But I'm not ready to say the cycle's dead. That would be it's just too confident, right? And that would be the kind of statement that can get investors in trouble. So the way I'm thinking about this is like this. AI may be moving the cycle more structural, right? But pricing, supply, capex, valuation, all of those matter. This is the balance I want to keep. Bullish on the theme, heck yeah. Respectful of the risk, you betcha. But because the last thing I want to do is turn a strong thesis into a bad decision because I got excited after a big move, right? Just keep in mind that things can change. That's for anything. But as bullish as I am long term, I'm definitely watching the trigger here. Okay, so what am I watching next? All right, first, I'm watching Micron's earnings and guidance. This is a major data point in the memory trade. I want to hear what they say about the HBM supply. I want to hear what they say about DRAM and NAND pricing. I want to hear about what they say about that AI demand. And I also want to hear what AI capex from the hyperscalers is going to be like. Because if the big tech companies keep spending heavily on AI infrastructure, that's going to support this memory thesis. And with DRAM specifically, I want to keep checking that the ETF holdings in concentration, because holdings can change. The weightings can change. With a thematic ETF, you always want to know what you actually own. The most important question is simple: does the demand remain stronger than the new supply is coming in? If yes, this thesis still has legs, which that's my kind of theory. If no, the risk starts to go up, right? Like that's that is really, what I'll be watching going forward. Not just the charts, and certainly not the hype. The actual supply and demand setup behind this memory trade. That's what I'm watching. So here's my takeaway. Better late than never, but not blindly. I'm glad I caught DRAM's move. I'm glad I got exposure to the memory theme. I was disappointed that I didn't get the big trades, but after this big run, the question is not whether the thesis worked. It did. The question is whether is this thesis still strong enough to justify me putting in new money. So that's where investors have to be careful. This is a good thesis, can still become a bad entry. The strong theme can still get crowded. And a winning trade can make you overconfident if you stop asking these questions. So for me, DRAM and the AI memory trade is still on my radar. I think the opportunity is still real. But I am watching the supply, pricing, earnings, guidance, and whether the AI demand stays strong enough to keep this cycle going. That's the honest answer. I'm interested, I'm invested, but I'm not turning my brain off. So I'm using my dollar cost average method, which actually you can find on my website. I actually have it on Amazon.com. There's my book, along with other items that you can find on practicalincomeinvesting.com. But if you don't go on there and you don't use any of the free stuff and you don't look at it, take away this. I personally think that this is far from being over. I think we have 2 to 5 good years left on this memory build out, with along with other AI build outs as well. The chips are still real, but I see a lot more competition coming in with the chips with Tesla, Amazon, Google, all making their own chips and things like that. These are things that I'm watching for there. The memory chips are still being made by these companies in the DRAM ticker that I'm in. If you found this helpful, let me know in the comments. I'm curious what you think. Is AI memory trade still early, or are investors starting to chase? Also, if you want more practical income investing breakdowns like this, make sure you subscribe to the channel Practical Income Investing. I focus on real world investing themes, income strategies, trade ideas, and the risks that come with them. And as always, this content is for educational, informational purposes only. It's not financial advice. It's not a recommendation to buy, sell, or trade any security, ETF, or investment strategy. Do your own research and consider speaking with a licensed financial professional before making investment decisions. Visit Practical Investing at practicalinvesting.com. Thank you so much for staying through the whole video. I hope you got something out of it.